everyone, this is Flora from Fabulous Accounting Solutions. Today we are going to talk about did you purchase your property in correct name? Because a lot of clients ask me if they can reallocate their property percentage for tax purpose. So we are going to discuss this topic today. Let's go. So firstly, a lot of people purchase the property in personal names. There's three ways to purchase in personal names. Your individual name, joint names with your partner, and tenants in common. So you can choose the percentage between yourself and your partner. Joint names we know it's default 50-50 for each. And the tenants in common, you can choose the percentage, vary the percentage. You don't need to stack on 50-50. So what's the benefit you purchase property in personal names? We know a lot of people purchase the investment property for tax purpose. So because they personally need to pay really high tax, they are on really high tax bracket, so they want to reduce tax. So if they purchase a property and that property can produce losses, negative gearing each year, and then they can get the tax benefit to reduce their individual tax returns. And they can, if they lost money at the end, when they sell this property in the future, if at that time they didn't get the capital gain, if they got capital loss, and they can have the capital loss benefit to reduce their personal other investments capital gains to offset that capital gains, and then they can further reduce their individual tax. What's the disadvantages to purchase in personal names? Firstly, it's very costly to change the percentage. So that means if you purchase in joint names or in tenants in common, if one person got really high income and another person like housewife, they have minimum income. So from the beginning, when you purchase a property, if you know this property will produce negative gearing, so for tax benefit purpose, maybe you want to give the husband more percentage to fully use of the benefit, but in the future, when you sell this property, if in other case, if you didn't lose money, if you made lot of money when you sold this property, that means you can get a large capital gain tax bill. So this person got the higher percentage for the previous years, need to pay more percentage of capital gain tax on this. So some clients keep asking me if they can change the percentage when they sold this property, they would like to change the percentage, increase the percentage on the housewife and reduce the percentage on the husbands. Unfortunately, it's very costly to do this, because when you sign the contract on purchase, you already set the fixed the percentage for each joint name, that's 50-50, and tenants in common. For example, the husband is 80%, housewife 20%. So at the end of the day, still keep the same percentage for each. If you want to change the percentage for capital gain purpose, you have to pay stamp duty for transferring that part of percentage to the other party. Also, the CGT event traced. So that means the other partner receiving more percentage, they have to pay capital gain tax on that portion of transferring property. So it's very costly. But if you keep losing money, of course, you don't need to change the title, because the husband can get the elective gearing each year, and the end of day when they sold the property, they keep losing money, they got capital loss, and the husband can get the benefit from the capital loss to offset his other capital gains. So it really depends, case by case. It's no fixed answer. Okay, so what's the better choice if you are not losing money but you keep making money? What we can do on that? I guess everyone want to make money. That's why you make investment. You don't want to lose money. You make investment, you put your capital in because you want to make money instead of lose money. I will suggest you buy in the name of family trust. What's the benefit? We discussed for my last 2 weeks. The first benefit, you got flexibility to change net profit each year. You can distribute your investment properties profit in family members each year, so you can get the maximized tax benefit. Because things keep change. We all know things keep change all the time. So we can allocate different percentage to each family member for each year. We can vary it every year. We don't need to fix this rate, the percentage. So that's good, and you wouldn't get the capital gain tax issue, and you wouldn't get the stamp duty issue, because you didn't change the property's title. The title still in family trust name. It's not like you purchase in personal names, that's each person, that's individually, they got different percentage. So you change the percentage, that means that part change the title. But for family trust name, you never change the name, you just change the distribution percentage to each family member. So you got the flexibility to change the net investment profit to members every year. Also, you got capital gain allocation benefits as well, because everyone wants to make money. A lot of people can be waiting for make money. At that time, they sold their property. They wouldn't sell earlier. They would like to sell later. Because they want to make money. That's why they investment in for. So if you make money and you don't want to pay that much capital gain tax, because if you already make really high income from other sources, and then you got this actual income from sold of this property, how to do with this capital gain? Because if you allocate all this capital gain on yourself, you need to pay really high capital gain tax. What you can do? Very lucky, because if you purchase in family trust name, you can allocate more capital gain on your partner or on your parents, on other family members who having really low income. So if they got really low income, you can allocate to them at least 20k, and they don't need to pay any tax on this. And another good news that for family trust, that's the same as individuals. They can get 50% capital gain exemption for local Australian resident. So that's another good thing. So you can minimize your tax bill. So that's a really good. It's a benefit if you make money. What's the disadvantages? We will talk about the advantages. The disadvantage is if the property you purchased not like what do you think, if it keep losing money, you can't distribute investment losses. Doesn't matter it's running losses or capital losses. You can't distribute investment losses into family members to help them reduce their personal tax bills. So you got two options to go. Firstly, buy in personal names. Secondly, buy in family trust name. Of course, you got another choice, that's buy in self-management super funds, but that's another topic, because we all know if you purchase something in your self-management super fund, you locked this money in. Even you sold the property, you can't get this money out till you are retired. So yeah, we only talk about the money you can take off from the entities. So all in all, what you can do, if this property keep losing money, I think you purchase in personal names, that's a better choice. If the property keep earning money, if you can get big profit in the future, you definitely should buy in family trust name, and you get more flexibility to allocate income. Then you can get maximize tax benefits and minimize your tax bills for the whole family. So that's all for today. So hopefully you like my channel. Please do subscribe my channel, and then we can keep going to have more interested topic for you. And please hit the like button if you like my channel. So see you next week. Thanks. Bye bye.